Okay, I'll just introduce you to Out Resources. We're a junior Australian-based exploration company moving into a development stage. Our key project and asset is the Bottle Creek Gold Mine. It's located in Western Australia, 200 k's from Kalgoorlie, about 80 k's northwest of Menzies in the northern goldfields. As a usual disclaimer, I'm actually going to start this presentation in a reverse order. I'm going to go with the last page first, and then, because I think this is an interesting metric and an interesting comparison that we came across only just recently. This spreadsheet here, this is the valuation and sale by Newcrest to Roxgold. This sale was executed on the 15th of February this year, and it was a sale of an asset in the Côte d'Ivoire, a exploration gold play that Newcrest had bought from one of our companies here, Apollo Gold, and spent several years drilling. They've ended up with a 430,000 ounce resource in the inferred category. They sold this project to Roxgold for 30 million US, 20 million cash up front and 10 million on the first gold pour. So converting that into Australian dollars, we estimate at the current Australian dollar exchange rate, it's $42 million, the sale of that project. I've put Out Resources project, Mount Ida project, on the right-hand side. We've got a very similar metric here. We've got a 410,000 ounce gold project, which we've developed in the last 11 months, 3.8 million ounces of silver, the 6.8 million tonnes of rock, similar amount of drilling, smaller tenants, but on 6 granted mining leases. Our resource, though, is in indicated and measured categories in JORC 2012. Our market cap is $7.5 million. So I think from an investment opportunity, that could give you some indication of the potential upside with the company moving forward. So I'll move forward. Fundamentally, what we've got here is 3 projects. The Bottle Creek Mount Ida project, a exploration play up in Leinster, and a IRG system located in New South Wales. We've delivered in the last 11 months 400,000 ounces of gold, 3.8 million ounces of silver. We've moved the project from being an exploration play into a near-term development, realising that we actually have enough gold in ground and silver to actually develop the project and put a treatment plant on site. So here's our project area. The red is showing Out's projects at Mount Ida. The blue is Eastern Goldfields assets, also in the Mount Ida and the Davyhurst region. And the other side, we've got Intermin Resources, and then over on the east side, Gwalia, which is St Barbara. So we're on a very good geology regime here. We've got the Mount Ida Shear, the Ballard Shear, and the Zuleika, which are all significant structures in the northern goldfields of West Australia. We've got some acquisition asset potential. The Timony mine is owned by Eastern Goldfields, which is currently in administration in Australia. We believe this is a stranded asset, and we've made an offer for this particular asset to Eastern Goldfields to add it into our portfolio. It's a small high-grade asset, grading at about 13 grams, 14 grams a tonne. Small tonnage but high grade. Here's recent block models. This resource upgrade only came out last week. These are the block models, is indicated, measured and inferred. The top slide is the unmined Emus ore zone, and the bottom slide is the VB Bogues ore zone beneath the 2 open pits. So we're currently sitting on 6.8 million tonnes at 1.85 grams, 406,000 ounces, and 3.8 million ounces of silver. So we estimate from this, we have a mine life of around 8 years planned on the basis of this. This is now being optimised and will come into a JORC reserve statement in the next 4 weeks. Metallurgy is very solid, 93% recovery. We've diamond drilled the ore zones and tested those. We've got a better recovery from the historical mining cycle that was undertaken by North in the 80s. 93% on the gold, 65% on the silver, up to 80% passing 60 micron. So it's a very simple plant. The plant design incorporates a two-stage milling, two-stage crushing circuit, and it's got a recovery within 12 hours in leach kinetics. So work index is 10.6, so essentially got extremely soft ore, and it'll process very quickly through the plant. We've optimised the pits. This is the Emu and Southwark pit optimisation. We're planning on mining this in the first stage in 3 stages of mining cycle. This is the first stage of the mining cycle, which will mine 500,000 tonnes. The average grade will be about 3 grams a tonne. And we're also looking at a very, very quality strip ratio of only 8:1. The company's moved forward, as I said. We've moved from an exploration play into a development play. This is the preliminary plant designs. Obviously, there's a significant number of more plant plans, but this is just the overview of the plant. As I said, it's a 2-stage crushing circuit, 2-stage closed circuit mill, leach tanks into a carbon stripping circuit on site. So it'll produce gold ore bars on site. So we've moved this project forward in such a way that, you know, we're virtually 3/4 of the way through a definitive feasibility study, but we've sort of done it without a lot of fanfare, and we haven't announced much of this. So this is where we started the project in March, drilling in 2018. In 11 months, we've delivered 3 resource upgrades and an acquisition, making the project into what it is today. So we've delivered this in a very short time frame, and we've also delivered it for under $4 million in actual exploration costs. So our cost per metre of resource ounces is $9.80. An interesting point we noticed with the Newcrest sale to Roxgold, they'd spent $21 million to develop a 430,000 ounce inferred resource. We spent $4 million and we've got a 400,000 ounce indicated and measured resource. So basically going forward, we have, as I said, a significantly undervalued company profile at the moment. Our market capital is $7.5 million on the back of this particular asset. We've done some metrics across the value of exploration assets in Australia. The average in-ground resource ounces around $33 to $35 valuation. Currently, we're valued at $18 a resource ounce. As we move forward, we've got an optimisation study started. We'll deliver a first maiden resource into reserve in the next 4 weeks. So we think that'll be a significant catalyst, from a capital gain perspective for this particular company. We have a $5 million payment to the vendor. Partially why we're in Hong Kong is, we haven't really marketed this company, or we haven't marketed this project. We do have to get some debt finance to pay the vendor for this project. It's $5 million and it's due in 2020. We have 2 small payments, one in July this year and one in July next year, which we'll manage from equity placements and raises. But the funding of the bulk project is $4.5 million at the back end. So, but again, it doesn't have to happen until December, end of November 2020. We believe we'll be well in advance of that. So that's really our story. And I came in under 10 minutes. Thank you.